a pretty quick meeting, but a lot of great information today. The topic was kind of how to keep wealth, right? The discipline of consistent wealth building. For 30, I always get this wrong, 88, 37 years, I guess, 37 years, I've seen people come and go in industries that are really hot and then they cool off. And, everybody in the mid 80s, I'm not mid 80s, in the mid 2000s, if you were a mortgage broker, you could make $500,000 a year. And like it was nothing because people were refinancing their house multiple times. And as interest rates dropped, it just was this phenomenon. But making money is one thing. Keeping it, growing it over time is another. Wealthy people don't just get rich. They stay rich by applying discipline, strategic thinking, leveraging cash flowing assets like we've talked about with infinite banking. So we're just going to go through a few strategies. And this is all around the things that I've done. So it's buying businesses and rental real estate and just to sustain long-term wealth. Okay. So the first thing is, would you rather build or buy a cash flowing asset? Well, I would tell you that we all kind of want to own profitable businesses, right? I mean, that'd be great. If you, and why do you want to own a business? Well, tax advantages, the ability to reinvest profits into other wealth building opportunities. Sorry, my phone, like all of a sudden ding, like my bank. It's not like a problem, but it's like on a form or something. Buying or building cash flowing businesses. If you have a unique idea, then yeah, build the business. But buying an existing business instead of starting one from scratch, if you can acquire the business with proven cash flow, existing operations where you're not starting from scratch, trying to hire the right person to run the business, and then look for businesses where owner financing options, just basically to limit your upfront capital requirements. I mean, that's when forever, again, the whole time that I've been in business, everybody wants to know, how do I invest or how do I buy real estate with no money down and no out of pocket? There is a way to buy businesses that way. And you can use technology to remove yourself from daily operations, right? Either technology or people. And sometimes people ask me, well, how do you have these businesses and you don't run them? I hire really good people and I overpay them and I give everyone an opportunity for equity. Sounds simple, but that's how you do it. And I don't want to micromanage anybody. So I want to have somebody who can take initiative and run the business and run with it. I mean, raises, I don't want to talk about whether somebody's getting a raise in the warehouse and things like that, right? Then if you leverage infinite banking, if you can have that whole life policy be your money pool and then finance growth, business growth, to buy out competitors and consolidate new ventures while that money's coming back in. So I think one of the key is how to stay rich, how to stay wealthy is diversify revenue streams within the business, right? I just had this as a problem with one of my businesses where Walmart came in and just kind of, threw me a real curveball. And thank goodness my CEO of this business, he got us another great line of business that's replaced about half of Vizio overall. Now, we haven't lost Vizio, but I don't like the way Walmart does business because they basically gave my bid. The short version of the story is they gave my bid on a job to my competitor. It's just not the way to do business, but that's Walmart. That's what they do, right? So the other thing that you do, diversify revenue streams within the business, pay yourself first, take distributions and invest in other cash flowing assets. That's the key. It's easy to say, oh, I had this money come in from this business. Now I'm going to go buy a new car. I'm going to go buy this. I'm going to buy that. Reinvest it. And then, have an emergency fund and this that you need, but also you own the debt. Don't go down to the bank and get debt. You own the debt as the business, right? So, and then kind of sell when the valuation is high and reinvest in higher yielding assets. Sorry about this. I have no idea why this keeps on beeping. So I have to do not disturb. Do not disturb. Okay. Sorry, I hope that made sense because it was kept on beeping in my ear. Okay, scale and optimize rental real estate. Real estate creates wealth through cash flow, appreciation, tax advantage, leverage. Those are the things: cash flow, appreciation, tax advantage, and leverage, right? And I know a lot of people that are making seven figures um, that aren't paying any taxes because of depreciation. Again, I know I've told this story before on here, but I don't care if you love him or hate him. But during uh, probably 2016, 17, somewhere in there, Today's Show came on and they said Donald Trump is a horrible business person. He lost over $1 billion over these 10 years. Well, did he? No, he just got to depreciate it. It shows as a loss, and that's great. I wish I could give me some losses then that don't affect my income. All right, so if we're going to buy real estate, we buy it for cash flow, not speculation. Okay, so it's not like, hey, I think I can buy that for $1 million and it's going to go up to 10 million. And there are kind of rules like the 1% rule. Monthly rent has to be more than 1% of the purchase price. Certain little things, right? The BRRRR method. So for everybody that doesn't know what the BRRRR method is, but you buy an undervalued property, you rehab it to increase the value, you rent it out to generate income, refinance it to pull out equity, and then you repeat. Not, I mean, if you're doing that in multifamily, I'm all in. If you're doing that house at a time, it's tough. And buy and flip flipping houses, I just don't think it makes sense, because why would you want to kill the goose that's laying the golden egg? If you have something, I mean, it does make sense. People make a lot of money. It's a lot of work, I should say. Okay, I don't want to do that. You'd be amazed on multifamily how much you can use seller finance or partnerships without a lot of upfront capital, and making the deal with the seller. Nick, Harper Jones, and myself did a deal in Tennessee, up in Harper's neck of the woods. We put zero money in. We sold one of the properties for the down payment the guy wanted, and then the guy seller financed the rest of it. And it was the portfolio. So when you do a portfolio, if there's 10 properties, you got to sell 2 of them to make the down payment. You're out of pocket zero. And then there's seller financing the other 8 properties. I mean, so that's a win. And we did sell those because they increased in value and we felt like it was the peak. So the way that people stay wealthy is hold properties long-term for passive income and appreciation. And then, keep your leverage reasonable. I'm all about leverage, but avoid overextending yourself with debt. And this is where people get in trouble with capital calls, etc. Take advantage of any kind of tax benefits like depreciation, 1031 exchanges, etc. And set up an LLC or trust to protect assets and minimize your liability. So here's my 30 seconds or less on trust. The reason that you want all of your assets in a trust is the trust doesn't do anything. Well, if it doesn't do anything, it can't be sued. And if you don't own anything, then you can't be sued, because what are they going to go after? That's the simplest reason in my mind to have a trust. Okay, I said this earlier, but recycling the profits into more cash flowing assets, that's how you create velocity or you gain momentum in building wealth. It does not happen overnight. It just takes a little bit of time. But wealthy people don't let their money sit. They reinvest it into income generating assets and opportunities. So take businesses or rental real estate. You want to buy more, right? Once you kind of figure out that, hey, it's not as scary as it might sound, then look for other businesses. And, like if you want to know why people would sell a business, because people don't see the cash flow. They want the cash. They want the lump sum. But if you fund an infinite banking policy and then you borrow the money out to keep on acquiring more and more assets, and then as the money comes back in, you are using the money, creating velocity of money on this side of the ledger. And on the other side of the ledger, the left side of the ledger, your money growing uninterrupted compounding interest. And uninterrupted. So just a little bit every day. It's that compound effect. So what do the wealthy do? They don't let their money sit. They reinvest in assets that provide a return. And I see people do this all the time, but avoid your lifestyle inflation. Don't spend just because you make more. Okay. Keep reserves in a place to cover unexpected downturns, like your insurance contract. Right. Okay. So once you start to build that, the fourth kind of strategy is tax. It's not about how much money you make, it's about how much money you keep. So wealthy people don't just make money, they know how to legally avoid unnecessary taxation. I have a team of people that work on this every month. I have to shake my head because finding people in this area is hard. But one of the things to do is real estate depreciation, cost segregation to reduce taxable income, accelerate the depreciation. Also, you could structure your business income using S corps, LLCs to minimize self-employment tax. I mean, all these little things add up. Remember, it's compound effect. The accumulation is the same way on the saving. So borrow against assets, whether it's your whole life, real estate, instead of liquidating, and that's going to cause capital gains tax, borrow against, use the policy or use the equity in the real estate. Also, opportunity zones, 1031 exchanges, to defer tax and keep more capital compounding, keeping that capital compounding. So you got to find, once you start to do this and you start to build, you got to find a tax strategist, not just a CPA. Okay. I mean, some CPAs are tax strategists, but you got to legally reduce taxes and then be constantly reinvest the tax savings into cash flowing assets. Okay, so now we're reinvesting equity, we're reinvesting this, we're reinvesting. Again, what else did we say? Use family trust and estate planning to protect and pass down your wealth tax efficiently. Again, you could use your insurance contracts, put them in an ILIT, which is a way to pay estate tax. All right, so you're doing all this. How are you going to manage your cash flow? Wealth disappears when cash flows are mismanaged. Controlling your capital is the key thing to sustaining long-term wealth. So use a profit. This is probably the simplest way, but the key way is profit first model. Okay. Allocate income into specific buckets: profit, reinvestment, taxes, emergency fund. And keep at least 6 to 12 months of operating expenses and liquidity for businesses and real estate. 6 to 12 months operating expenses. Because in 6 to 12 months, you can pivot. Like when I've gotten caught and had to put money into a business, it's always solvable in 6 to 12 months. Never, ever invest in something you don't understand. Only deploy capital where you have an edge. If you don't, then don't deploy it. Don't go, like down here, I don't go against the big boys, these big REITs and these trusts that are coming in here and buying stuff. There's a company that's building a tower in my neighborhood. They're putting millions and millions of dollars into it, hundreds of millions of dollars. They have 6 units sold. You know what that would do to me or anybody else that's a real estate developer? It would kill them. But they have so much money, they don't care. I mean, they think eventually it'll work out. That's nothing that I want to play with. So how do the wealthy stay wealthy? Track every single dollar coming in and going out. You guys probably get tired of me saying this, like making it more like about being in shape or whatever. But the fastest way to get in shape, and if you want to see like why am I gaining weight or why am I not losing fat or whatever, write down everything that goes into your mouth and write out the nutritional value. I guarantee you're probably eating more calories than you think. There's your answer, right? So always track every dollar coming in and going out. Reinvest cash flow into more income producing assets. It's pretty simple. And never rely on one income source. Diversify. Always, you got to have, even if you have just a 9 to 5, that's tough. You got to have it over time. And so think about this really as discipline over decades. The real secret to staying wealthy is consistent discipline over decades, and avoid, because they will come, get rich quick schemes. Build wealth steadily. Just in 5 years, it'll make such a huge difference in your life. You don't need the get rich quick, and really focus on cash flow first, then appreciation. I'm all for appreciation. And then, just diversification and smart tax strategies. And it's, again, remember, I'm going to end this the way that I started. Wealth isn't about what you make, it's about what you keep and multiply. So you're going to be disciplined, reinvest, protect your capital. You'll not just get rich, but you'll stay rich for generations. And you look at what the Rockefellers and you Rothschilds and, some bad examples, but like how they stay rich, I'm not talking about what they did to get rich. Okay. I'm talking about how they stay rich. Is they have lots of diversification, lots of things like that. So, okay. So I'm going to read the comments now. How do you know when to start paying off less of the loans and start a new policy? I think there's a little bit of art in that, Glenn. Me, I'm always trying to increase the capacity of my policies, but I would say in the last 3 years, kind of running out of people to insure. My numbers at 59 don't look as good as saying Nick's numbers at 47 or whatever his whatever old he is. So paying down policy loans is like get it to where you're buying cash flowing assets and those are paying down the policy loans. But capitalization in the first 4 years is key. Capitalize and just kind of get your sea legs because when you need to pivot and build the system, it'll happen fast. Yeah, once the cash flow is strong enough, then you open up. Yeah, I mean, I think you answered your own question. Okay, so then Matt says we found a house and made an offer, primary residence, not investment property. Still hope to find investment properties someday. It's very much a seller's market. That's my update. Cardone said buying a home is for suckers. It sure is expensive to buy. Markets are pricey, questionable cash flow. I'm not a Grant Cardone fan. I'm just telling you. I signed up because they're so good at marketing things. I signed up for one of their courses. I got a refund because I just wasn't impressed. It's saying something like that. There's a lot of emotional reasons to own real estate. I mean, honest, I bought this house. It's gone up not 3 times, but about 2.7 times since 2020. So that doesn't sound like stupid to me. I could borrow equity and go buy something. So that's what I would say. That is buy other assets that are going to pay for your residence. So if it takes 3 rental houses to pay your mortgage, well, then find 3. And it's not going to, by the way, it's not going to happen like next month, but over the next whatever number of years, find some assets that are going to pay for it. And I remember Robert Kiyosaki talking about, I think he wanted a Ferrari or a Corvette or some kind of, car. He and Kim Kiyosaki said, you can have whatever you want. You just got to buy an asset to pay for it. And I love that. And that's exactly the way that I think is I could live in a $20 million house if I had an asset that would pay for it. But if I got to go work and I got to go generate income and pay for a $20 million house, then I'm not going to be sleeping in that. Right. So that's what I would say is just finding that. Like success leaves patterns. And all of these people, sometimes you ask somebody who's a really successful real estate investor or has bought a lot of businesses, they almost are a little bit shy to tell you how they did it or what they do because it's so simple. Some of it's so simple. What's not simple is finding the deal. Right. But if you're in, when I say around here, I'm playing with the big boys. If I go 30 miles that way, totally different deal. They don't want to be 30 miles. They want to be close to the water. They want to be close to the Gulf of America. They want to be, I slipped that in there, they want to be close to the ocean, to the water. They want to be, or any water. It doesn't matter. It could be a lake. That's where people want to be, right? So they don't want to be here. I don't want to try to compete with them. I mean, I own some of the condos and things in my neighborhood. And there were some that when people got water and Ian, they were good deals. I am undervalued, fix them up. Then the market went soft, so I'm glad I didn't do it. But I'm not a project guy. I don't want to rehab things. Rehab my house here, my house in South Dakota. I don't want to do that. I don't like dealing with contractors and things not happening on time. Anyway, I hope that answers everybody's. The best return of IBC is, Glenn says the best return is sleep at night. Absolutely. Nelson used to talk about that. Like he would say, IBC is a stress-free way of life, right? And Nelson, again, I say this all the time, Nelson's one of the wealthiest people that I know. Was he rich? Not by anybody's standard, but he was wealthy, had plenty of money for his lifestyle. That's not the key. That's why we say your ideal lifestyle. Your ideal lifestyle is driving Lamborghinis and Ferraris and living in a $20 million house and flying private everywhere. Well, then we need more assets. My lifestyle is just not that fancy. I mean, I play golf. I go out to nice restaurants. I drive the cars I want to drive, but I don't want anything fancy either. Do I love driving flying? Yeah, for about 2,000 miles a year maximum. And then if I do the math, it's not worth it to me. So if you're a car guy or girl, then, get that Ferrari and have fun. That's the thing about being free, financially free. You get to make those choices, right? Choices, money gives you choices, choices gives you freedom. I guess that's a place to end it for today, is just repeat that. Those little things, by the way, are affirmations. And forever, I thought affirmations were just hokey, whatever. They're not. Anyway, thank you all. Hope you have a great Monday. It's great to see everyone. Next week, we'll be back on and we'll dive into something else. Godspeed, and we'll see you next week.